Everyone, I just had a great idea for another video. I was speaking with Mike, and he was expressing some frustration about some clients who gave him an objection to life insurance that he was proposing for them based on their concerns. The interesting thing is that these people already had life insurance, and what they had was term life. And Mike was trying to suggest to these people that they buy permanent cash value life insurance. And they told him that they didn't need it because they already had term life insurance. What most people don't realize is that term life insurance is not enough. And a lot of people have it as opposed to other types of life insurance because term life insurance is inexpensive, relatively speaking, as compared to cash value life insurance policies. But here's the difference, people. Term life insurance is only good for a term or a period of time. Permanent cash value life insurance pays out a benefit to your loved ones whenever you die, even after a specific term or period. So cash value permanent life insurance will pay a benefit even if you live to be 110 years old. By contrast, if I buy a 20-year term policy, here's how it works. Let's say I'm 40 years old when I buy my term life insurance policy and it's 20-year term. My premiums are going to be relatively less expensive as compared to a permanent cash value life insurance policy. And that's because I only have the insurance for a limited period. Both types of life insurance, the premium payments are determined based on my age at the time that I purchased the insurance policy. So at 40, I have some inexpensive premiums for a 20-year term policy. 20 years from now, when I turn 60, the insurance company is going to say, guess what, Cheryl? We have a very high suspicion that you are going to die within the next 20 years. We don't want to have to pay out a claim for that because you really haven't paid a lot of insurance premiums on this contract. So we are not going to offer you the ability to renew this policy now that you're 60 because the likelihood that you will die within the next 20 years is very great. Well, here's a huge systemic problem in America today. So many people have term life insurance and don't buy permanent cash value life insurance. So in the situation where I just described at age 40, I buy the 20-year term policy. At age 60, when the insurance company says, I'm not going to allow you to renew that policy, you're suddenly without life insurance. And that's not a comfortable position to be in. I can speak very confidently about that because I've had to make a claim for one of my own children. And the best day to have life insurance is the day when you need it and make a claim on it. So here's why some other people are confused about term life insurance. Let's say instead of buying a 20-year term policy at age 40, I bought a 10-year term policy. Well, at age 50, the insurance company might say, well, Cheryl, we don't think you're going to die within the next 10 years, so we will renew your 10-year term policy for you. So you can have it for another 10 years until you turn age 60. But here's the situation. You are 10 years older than when you bought that policy. And so we're not going to let you continue to pay the low premium that you've been paying for the past 10 years. We're going to base your new premium amount on how old you are now. And so when the policy renews at the end of the 10-year term, my premiums jump exponentially. It's still relatively less expensive than buying a permanent cash value life insurance policy at the age of 50. But the premiums are incredibly expensive relative to what I was paying before. And then when I turn age 60, the insurance company may or may not say, we'll give you another 10-year term period and let you renew it again. It depends on the insurance company because it's, a higher risk that I will die between ages 60 and 70. But they're going to increase the premiums relative to what amount of risk they're taking on and what my new age is. I just think it's very, very important for consumers to understand that term life insurance does not pay out no matter how long you live. And certainly if it does renew, and not all 10-year or 20-year policies are renewable, if it does renew, your premiums will be more. For that reason, I tell everybody that I talk to, that you need both kinds of life insurance, term life and permanent cash value life insurance. And unless you are wealthy enough that you can self-insure, everybody needs that. Why do you need both? Well, there are temporary expenses or one-time expenses that you will have that are good to be covered by the term policy. So for example, if you have a 30-year mortgage, you might want 30-year term to pay off the benefit and help pay off your mortgage in the event that you die before the mortgage is paid off. Because certainly you don't want your spouse to be stuck with a mortgage that they can't afford on one income in the event that you pass away. Other people may take out term insurance to cover other debts like credit card bills or car loans, or even other temporary expenses like having other forms of debt or obligations that are not permanent. Permanent cash value life insurance is better suited to address those needs that you are always going to have. Burial expenses or cremation in the event that you aren't going to be buried. Ensuring that your kids can go to college. Helping to provide income replacement so that when you pass away, your spouse doesn't have to reduce their standard of living because they're now living on only one income instead of two. Providing a benefit to your heirs or a lump sum to your kids in the event that you die. Those are things that are better handled by cash value life insurance because you're going to have those needs regardless of when you die, not just for the next 30 years or the next 10 years, but if you live to be 110, those are still going to be expenses that you have. So, and I did want to also mention, in relation to the term insurance misunderstanding, a lot of people believe that they don't need life insurance because they already have life insurance that's covered through their employer. And I was recently talking about this on LinkedIn. Not all employers provide life insurance to their employees. For those that do, the vast majority provide term insurance. And typically that term life insurance policy is limited to an amount of insurance that's equivalent to what your salary is at the insurance company. Usually, if you leave employment with that company, you cannot take the life insurance with you, which means it is not portable. So, although that is an available option with some employers and some life insurance plans, with most it is not. So a lot of people give the objection, I don't need life insurance, I already have it through my employer. And I would say that that is an invalid objection for most of Americans today, because if you leave employment with that company, most likely you cannot take that life insurance with you or continue it even though you are no longer employed with that person or that company. So I just wanted to take the opportunity to kind of dispel some misconceptions about what type of life insurance people need. I also want to say that when it comes to permanent cash value life insurance, there are several different options. I don't just mean whole life. There are also universal life products such as variable universal life, indexed universal life, and traditional fixed universal life that provide permanent cash value life insurance benefits and will pay out a benefit to your loved ones regardless of how long you live. I'm not going to speak on this video to which type of permanent cash value life insurance is best, because there is no best. What is best is what's best for that client, their needs and concerns. So thanks everybody for listening. Hope you learned something today, and we'll talk to you on the next installment. Thanks.